Good morning, Meat Spin. Long time no talk. How you been there, Kevo? How's your grifting been going, huh? You been using Tesla stock to increase the price of your course so you can sell people a bunch of freaking garbage? But you think you're a good person, don't you? You think you're saving the world? Well, guess what, Kevin? Your investing philosophy, your investing strategy is a pile of human excrement. And it makes me sick that you have even one subscriber on YouTube. It's disgusting. Now, today, I have a very simple request of you, Meat Spin. I want you to release your tax returns. Now, you may think this is because, oh my God, I'm going to show people how rich he is because rich people are bad. No. I want to see some of your supporting schedules on your tax returns because I'm very interested in how much you pay in short-term capital gains taxes. Now, I'm going to show you the specific form I want you to disclose. And then I want to show the world how insanely ridiculous your investing strategy is, how it is tax inefficient and will underperform a broadly diversified index fund over the long run. So let's go, Kevin. Let's go check out this tax form. This form is called the Schedule D. The Schedule D shows a person's capital gains and losses. This is gains and losses you get from buying and selling stonks. Kevo. Now, there's two main sections here. You have short-term capital gains and losses that are assets that are generally held for 1 year or less. And then you have long-term capital gains and losses, assets that you hold for more than 1 year. So a year and a day at least. So if you hold a stock for a year and a day, and then you sell it, you qualify for much lower tax rates. That is why there is a distinction here between short-term gains, which are taxed at much higher rates, and long-term gains. Now, let's go look at the tax rates, and then we're going to go back and look at the Schedule D, and I want to give you my suspicions of what actually is on your form, which is probably a crap ton of taxes because you trade in and out of securities like a freaking clown. Now, Meat Spin makes a lot of money because, he charges $8.23 to teach you how to minus 69% off, 41% off to teach you how to trade in and out of stocks and YOLO into bubbles like Tesla. His tax bracket is probably 37% at the federal level of the United States, okay? So for every additional dollar he makes, he pays 37% of that in taxes because he's a good person. Now, on top of that, he also lives in California. In California, they also have taxes that go up to 13%. So, Meat Spin, when he sells his stocks, and I'm talking to you directly, Meat Spinio, you pay 37% at the federal level, and an additional, so on top of that, 13% for California. And on top of that, you also are falling under the net investment income tax, which is an additional 3.8% for people that, if married filing jointly, have net investment income, which I don't even know if you have net, you might be having losses, of $250,000 or more. So if your modified AGI is over $250,000, you're going to be paying that additional 3.5 or 3.8%. So let's see. 37 plus 13 California plus net investment income tax. You're paying almost 54% of every profit that you make. Every time he trades, he pays 53.8%. So, let's say he makes $100,000 on one of his hot trades. Take that number, 100,000, times his total tax rate, and he owes $53,800 in taxes. You subtract that from 100,000, he only gets to keep $46,200. Does that seem reasonable and intelligent to you, ladies and gentlemen? Why would you trade in and out of stocks and pay such high, massive, insane tax rates when you could just buy and hold in tax advantage accounts? Now, going back to the Schedule D, Kevin trades in and out constantly. In and out of the meat sack, out of the truck stop, into the docks, in and out, in and out. Most of his gains are going to be under here under short-term capital gains. That's why I want to see his tax forms. Come on, just be transparent, man. Let me see your taxes. I want to see how much tax you're paying there, bucko. Because then I can calculate how much you've paid every year in freaking taxes for your short-term stupid trades. And I can show your fans how much money you're losing and how much they're going to lose by listening to your stupid advice to trade options and gamble on stonks and buy into bubbles and buy and sell and buy and sell and buy and sell. Okay, Kevin, I want to see your scheduled D, your scheduled dick. Show it to me now. Show me that dick. I want to see it. I want to see those hot profits that you seem to preach so much about. And then I want to do my own analysis on how amazing your returns actually are. Anyway, that's it. I just wanted to make a short video. Kevin, just do it. I mean, what do you have to fear? I mean, you've made it, man. Just release your forms. Just do it, okay? Nobody's going to laugh at you except for me. Everybody else blows you and loves you. I think you're a scumbag and a grifter, though. But, yeah, that's it. Anyway, like, subscribe, tell your friends about me. Message me, Kevin. Tell him to release his tax form so I can do some delicious analysis. Talk to you later. Choo!